Hello traders, I want to buy the Dow Jones Index. I want to buy the Dow Jones Index. This is a live day trading. I'm going to just buy there at the 23917. That order is no peacefully, my friend. That's my order there, limit order to at 23917. Now, by the way, this video is for educational purposes only. It's neither solicitation or offer to buy or sell any financial instrument. It is primarily for the TSTW 24 traders. I'm now in this trade at a 23917. So as always for Dow Jones, this is what I say. Trader asked me, Joe, how much stop loss should I use? The correct answer is that depending on your own risk tolerance, you will decide what kind of what kind of stop loss you will use. All right, that's the correct answer. But, all right, with more experience, you will determine, okay, what is the appropriate stop loss that you should use for a particular stock, a commodity, or okay, financial instrument. All right. All right. So for Dow Jones, with my experience going through it over and over, 30 pip is reasonable. Sometimes you have to use 40 pip for day trading, which is a lot. So if you lose twice, that's an 80 pound gone or $80 gone, depending on whether you are using spread betting. If you are using $5 for per point, you can imagine how much you are losing for that stop loss. So for some traders, when I say 30 pip for day trading, they almost start crying. All right. Because some traders use 5 pip, 10 pip, those traders are on the 1 minute, 2 minute time frame. I don't go to the 1 minute time frame. All right. Some traders trade on the 10-second time. They say, yes, Joe, that's a scalping. Okay, good. So I'm now in this trade at 23917. And I will use my 30 pip stop loss. For that trade, I will not move my stop loss. Let's see even if I can use a lesser stop loss or not. I'm still here. I'm not stuck here, but I'm here. You may be wondering where is George. I'm here, please. So, what am I doing? Okay, that's a very good question. Okay, or what is the purpose of this tutorial, George? Is to show traders what usually takes place behind the scene when traders are day trading or swing trading. All right. So it helps traders to see the losing trade, the winning trade, the difficult trade, the messy trade, the craziest trade, and everything that you can imagine. All right. So this is the whole purpose of it. All right. So you start understanding more if you are a day trader what you can expect. All right. So you don't start dreaming and thinking that, oh, those people never lose. Everybody can lose. All right. So where am I buying? That's a very good question because yesterday I posted a video. I was live day trading the Dow Jones yesterday. Can you believe that? And the title of that video, I think it was what is a speculative trade? And I posted that video at the George Trio YouTube channel. Check it out. George as a George Washington. All right. So entry at 23917, top low 23887. All right. Just to make you laugh a bit when I'm changing my accent. Okay. Where am I buying? So, in fact, I'm going to live stream a video today, premiere a video at the George Trio channel at 9 p.m. London time. So that video, because this video I'll be posting a day later, okay? So tomorrow I'll be posting the video, so that video will be showing today, all right? Today is what? The 19th of December, 2018, and the time in London is 47 minutes past 6 p.m. So anytime you are day trading, you want to check the clock, all right? Professional, do pay attention to the time of the day when they are about to day trade. What I'm doing here, this is what we call the gap period. I explained it a little bit to traders last time, but because in the old days, all right, I was more direct with traders, and when I was saying all kind of things, all right, I was very blunt with traders, all right. That's what I meant by that. So what I was saying to traders, that during the gap period, all right, a very influential market participant can control the market. He can decide, can play with it, because either the market is not busy, so there are only few people trading during the gap period, all right. The major players probably, all right, have pulled out. They don't want to trade that portion of the market. So you can end up facing a situation where one influential market participant can control the market. And with that, it's very, very tricky to day trade. They will play with football, all right? One example would be like, they can pull the price, okay, like this. They say, okay, people know that the price breaks the ball, moving at 100, okay, it will pull back and retest it, okay? So here it is. It pulled back, it retests nicely here. So everybody is thinking that, all right, it breaks the ball, the 100, it retests, now it comes out it's broken, they want to buy it. Nothing wrong with that. But then, as the price goes up a bit, they push it back down the whole day. But if you have many major market players, it's difficult for a particular influential market participant to dominate the market. This is not market manipulation. They are just dominating the market. Because they have a strong, okay, influence in the market. That's why I say to traders, the best time for day trading, first 2 hours when the market is open, New York and London. If you are trading Hong Kong, be gentle, because it's not the same thing like London and New York if you are a day trader. So you may go around and say, Joe, what's the point of that? 7 minutes you are talking blah, blah, blah. Okay. The reason is, the time is 49 minutes past 6 p.m. in London. You may say, so what? Because London is closed. And this is the gap period. And I'm aware of it. But there are other day traders out there that are not aware of what I'm saying to you now. So they are placing trade, maybe they have 5 trades open. During the gap period, do not have many day trade open. Do not. Unless you're a lucky person, do not. So you see, the price may take time, it may be slow, you see, we are still there, and all kind of blah, blah, blah. Or you say it's going to go up, oh yeah, now it's coming back down, blah, 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 it's going to come down all day. All right? So why am I buying? You say, Joe, you asked that question before, you didn't answer it so far. On the daily chart yesterday, I point out to traders that the price did, you see, we have that green channel here. So what we say to TSTW34 traders, find a very good trading setup and then go to the first best time frame. Yes or no? Yes. So yesterday what has happened, the price break on the daily channel, I don't want to remove my line, my position breaks above the lower part of that channel. See here, this is the lower part. So day before yesterday, it break below it, and yesterday he retested it, and people sold it the whole day. All right. So the reason why I'm buying today is because the prime money, the time I'm entering the trade, the prime money to go back inside the channel. So yesterday, that line, that trend line was resisting because the price retested the final resistance. Today, the price going back inside it is telling me that the bullish momentum is increasing. Another reason why I've decided to buy, which I talked about yesterday, is because of that pink line you are seeing here. You will say, what's that pink line, George? It is the lower part of a pitchfork tool that I put on my chart on the monthly chart. So if you do not know about pitchfork tool, go to www.dayprotrader.com. So you see that Pitchfork 1 to 3, www.protrade.com, learn about Pitchfork 2 trading, Andrew's Pitchfork 2, all right? So the price came on the edge of it. So we are at the support level yesterday. The price was finding a bit of support on the edge of that Pitchfork 2. Today, it went back inside that declining channel on the daily chart. That is why, so I have a good reason, or you may say, I am authorized to be a little bit bullish at this junction. So, but it's not a long-term, okay, decision. I'm not bullish in the long term. I'm not bullish in the medium term. All right. Now, for the Dow Jones, in the long term, I'm a little bit bullish. All right. In the medium term, I'm 100% bearish. So, this decision to buy now, all right, is just a speculation. It's just a short-term decision. It's a short-term trend for day trading purposes to buy. So if you are a swing trader, you are thinking that we should buy, be very cautious, okay? So those are the reasons. So along the pink line, can you see the price form yesterday? An inverted head and shoulder chart pattern went down from this left-hand side shoulder, went back down from the head, and then now we have the right-hand side shoulder. And yesterday, it couldn't break inside that green channel, that you see the green line that I was showing on the daily chart, couldn't go back inside it. And it found a resistance on the edge of it, can you believe it? Which was the decision yesterday, price break below, all right, and retested that green line. And people sold it the whole day, can you see? Yesterday, they sold it the whole day, break below, retested, sold it. So today, on the 19th, the price start going back up, gently breaks above, you see, the black channel on the 5-minute time frame. See that channel, I draw a beautiful channel, you see? Huh? It breaks above and retests it here. Can you believe it? That's why the price did not return. Break above, retest, break below, retest. He did it on the daily chart, break below, retest. People sold it yesterday. Now, on today, on the 5-minute time frame, it breaks above that black channel on the 5-minute time frame, retest it on the edge of the pink line. That pink line is from where? The monthly chart. So that it goes up from a higher high and a higher low. Now, a higher high and a higher low. Now, I'm coming in a bit too late now. You see, so the whole day today the price went up. I am the last person buying. Am I? All right. Probably. This is the problem with us when we are day trading during the gap period. So you may say to me, George, why are you doing it then? That's interesting. Because trader asked me to record live videos, I'm recording different videos to show traders things that I've been talking about. So they say, Joe, you just talk. Now I'm showing traders the difficulties of trading during the gap period. That's what I'm doing here. I'm showing traders how they can cope with the challenge of trading during the gap period. So the whole day, since New York is open, you see how the price went up? The first 2 hours, all right, it went up here, so nicely, move. It's a nice move, fast move. And now I'm coming in a bit late. So how long before New York is closed? Now again, so apart from looking at the clock, we also ask the question, how many hours before the market is closed? So here I'm coming in, day trading. It may work beautifully, you know, sometimes it works beautifully, but sometimes, generally speaking, it's difficult. It's 55 minutes past 6 p.m. in London, call it 7. So in 2 hours, 5 minutes, London, New York will be closed. 2 hours, 5 minutes. So so you see that? So I'm trading, instead of trading the first 2 hours, I'm trading the last 2 hours. But so in the old days, and this is a discussion, I hope you are enjoying this discussion, unless you are a swing trader. If you are a swing trader, please stay away. We are day traders, okay? All right. All right. Sometimes a swing trader will come and mark day trading video down. Who give you permission to mark day trading video down if you are a swing trader? All right, let's move on. Okay. So I am trading in the last 2 hours instead of the first 2 hours. Okay. This was we are. Okay. But sometimes it may work beautifully. So in the old days, as I was telling you, all right, in the old days, I'm not very old though. So in the old days, if I can speak like that, is traders usually come, day traders will come, day traders that are trading indices will come to trade during the last hour of the day. So from 8 p.m. London time up to 9 p.m. London time, that's the last hours when New York is about to close. So everybody will gang in, day trader will come in, and they will trade the last hours. And something interesting, you see my trade is going up beautifully. You see that? It's now at 239.80. We enter around 239.17, yes or no? So what I will do, I'll move my stop loss somewhere here to secure my gain. You see? So this is nice, isn't it? At 239.60, is that enough profit to secure? Yes, I'll leave it there for now. So I got 30 pip above that. So I'm squeezing, so to speak, all right? Okay. 43 pips are secure now. That's 43 pips. Can you believe that? 43 pips. Very fast, yes or no? Okay. So if the price come down to that level, that trade will be closed automatically, yes or no? So this is the purpose of this tutorial, to show traders. That's it. All right, that's it. I'm out of that trade now, 43 pips. All right, so it went up, it pulled back. Okay, that trade is now closed. So let me finish what I was saying before, and then we come back to that. Okay. So what I'm saying to you is that in the all the traders, day trader will gang during the last hour of the day. If they are trading indices only, all right, and they will try to trade the Dow Jones, especially the Dow Jones, the last hour of the Dow Jones. And you will see the price will move during the last hours when New York City. Everybody was doing almost the same thing over the year until, all right, I don't want to blame one group. I can mention names now, but I don't want to do that because I don't want anybody chasing me, all right? Okay, until, okay, the market has changed dramatically. So it's not the same thing that we were doing before that is happening today. It has changed, all right? It has changed a lot. All right. But still, there are traders today that are playing that game. The last hour is bad. My recommendation, first 2 hours. So 70 minutes we are talking now. It's a live trading. So you see now, very fast, 43 pips. Why it did work? Okay. The simple reason is that because we are not violating the market pattern. That's the first reason. The second reason is because we are trying to buy at a support level. Here it is going up again. Look at that. That is running after I close my trade. All right. So what is happening? So sometimes you see the price will run fast. Why the price do run fast like that? Because the price sometimes they want to bring it quickly to a target level. So what is the target? Okay, that's a very good question. Oops, reversal. You see now? This is what we are saying. You see now? It's change direction. You see how the market change? You see? Decision, Federal Reserve today. Right? U.S. Federal Reserve talking about interest rate, blah, blah, blah. Right? So here it is. It just went. So 1 minute, you see how the market changed? We were talking about target before I put the target price change. So this is one scenario. This is economy news. Economy news. Do you want me to show economy news? Talking about the Federal Reserve putting up interest rates and all the rest, blah, blah, blah. Okay, Mr. Powell. This is it. It's 7 p.m. You see, 7 p.m. London time. So the economy news can change the dynamics of technical trade. This is one example. Can you see that? So as we are talking about the target, right, yeah, so the target, we can talk about it, is here. The trader will use the depth of the head and it will project it above the neckline to set the target. There is a target, what we call the ultimate target, and there is a midpoint target that we call the midpoint target. So the midpoint target, roughly, we can call it in this zone. So what is happening now, the price came near the midpoint target there, and then find a resistance and come back down. So can you imagine if I did not secure my gain as a day trader, what will happen now? That will become a losing trade. So if you are using 30 pip, 10 pip, 15 pip, price move up, okay? More, you move your stop loss. Right? So one example is that you are using 30 pip stop loss, all right? Price goes up for 40 pip, move your stop loss to the entry level. So you are securing it. Some traders use automated stop loss, stop setting function. Some brokers have the trailing stop, all right? So that will automatically follow the price if you set it for 30 pip behind the price. So price move up 30 pip, the stop loss move up also 30 pip to secure your gain as the price is going up. I do not use that at all myself. For day trading, I do not. One can use that for swing trading, but it's up to you. But as you can see here, how the price can change, and one of the reasons is the economy news that can change, just like that. The dimension of the economy. So 1 minute the price here, look where it is now. It's back to the pink line. Is it going to give me another opportunity to buy again? That is the question. All right. So you see, so it went to a midpoint target. Now it's coming back to that pink trend line again. I'll be watching the reaction here. If there is an opportunity to buy, I'll buy again. Probably they will push it here. Look at this one. See this pullback here? Probably they'll push it into that zone. Are you enjoying this discussion or should I stop? If you are swing trader, please stay away. We are day traders, scalpers, discussing, all right, day trading. All right. Are you enjoying it? Okay, so now you see. So this is the purpose of the tutorial, to show traders what is happening. So technically speaking, the price reaches a support level on the 5-minute time frame. So we see the first chart, inverted head and shoulder chart pattern, which is here, you see here. So the market was closed yesterday. Market opens again today, and we have another inverted head and shoulder chart pattern. Can you see it? The left hand side shoulder, the right hand side shoulder, and the head. So yesterday we have the left hand side shoulder, the head, and the right hand side shoulder. And again we have today another head, the left hand side shoulder, and right hand side shoulder. So we are seeing multiple bullish chart pattern in the vicinity of what? Support level. And that support level is the peak line. But ahead of that support level, there is that green line, which is the lower part of the daily channel, which is a resistance level. So what the price did yesterday, the price was trying to consolidate between that green line and the pink one. You can see here, from the green to the pink, from the pink to the green, from the green to the pink, and it tried to go back to it, and then they push it back down. All right. So normally the price, this was the gap period. So normally the price should go back and continue to oscillate yesterday. But because the market is about to close, they push it down here. And this morning they pick it up again. They bring it up again, well, to the green line, and people try to sell it down again, to play it again, to bring it back to the pink line. That's what they want to do. But it went back above it. So now he went back above it. Again, economy news, talking about the Federal Reserve, you see. Now this one, did you see what I said to you before? That probably they'll bring it here. Are you surprised? Here. How do I know? You see? Where did they stop now? You see? I could have bought it there. I'm talking too much now. Here it is. Now it's running away. You see here? This is what I was telling you. Yes or no? You see how they pull it back? How do I know? Because the pink line is a support level. All right? It's a very important support. But the reaction is too strong. So nobody wants to buy exactly there. So what is the next support level below that? That's the safest place. So we have one support level, which is the pink one, and another support level, which is the one I was telling you. So it was prudent for trader not to stop on the dot on that support level because of the crazy reaction. Price went up all the way here, coming all the way down here. It's a bit tricky to stop at this exact level. So they say bring it to the next level. Didn't I say before it happened? Yes, I did. It's just because of going to the mind of trader. This was happening all the time, right? They will not prefer, I will not buy here. I will prefer to buy below that because of how they try push it down too fast. So now they prefer this one. We will see. But the market continues to go down, but it stopped there and people bought it here. You see, they bought it here, try pushing. So some gambler, some scalper did buy here and it went up there. I could have done the same thing. All right? Are you getting it now? So the whole purpose of this blah, 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 so they say, George show us live trading, this is it. So you see, this is a very good example about live day trading. When we are day trading, buying nicely, all right, and then suddenly, out of nowhere, try push it back down. Because of what? Economy news. That can change the dynamics of day trading. And if you are trading currencies, you want to know when economy news are due. 7 p.m. today, you see? Federal Reserve talking. This is it. So probably some traders, as they are watching this video now, they will realize why some of their trade were losing trade as I was recording this video. All right? They will understand why the price crashed down. This is the market force. The Federal Reserve is a market force. All right? Market players they are, in fact. Okay? So we can't ignore them when they're about to talk. They will move the market one way or another. All right? Okay, so this will conclude our discussion today. Okay, about a live day trading, Dow Jones Index for educational purposes. All right? So if this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, please mark it down. All right? If you think it's an essential tutorial that can help other day traders out there, feel free to share with your friend. All right, on Google+, Twitter, Facebook, and Tumblr. I really appreciate it when traders share our video. I would like to say to those traders, thank you very much. I may not know you personally, but I would like to say to you, thank you for sharing our videos. All right. If you have not yet subscribed to our channel, please subscribe to our channel today. It is free. It's a George Trio, as a George Washington, George Trio YouTube channel. Subscribe, it is free, and be sure to click on the notification bell so anytime I record a new video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about live day trading. One more time, the Dow Jones Index. If you want to follow us on Facebook, our full Facebook page is Stochastic-MACD. Stochastic-MACD. Follow us also on Facebook because sometimes I'm posting video first on Facebook. Sometimes I'm posting them first on YouTube, so you want to know where I am, what's going on, so you do not miss anything. Happy trading to you all, and I will speak to you soon. Thank you for watching.